So hello, thank you for waiting so patiently. I'd like to welcome you to tonight's financial aid information night. We're going to be talking about financial aid, we'll talk about the FAFSA, profile form, and scholarships, how they work together and affect one another. So I'd like to welcome you and thank you for coming. I will be taking questions, so there'll be a period for questions and answers. During the presentation, you are welcome to put your questions in the chat or just make a note of them, and we will get to them at the end. I do not have the capacity to look at the chat window while I am giving the presentation, so I'll hold questions till that time. A few of you emailed your questions in, and I will be addressing those as I go along with the typical questions and the most common questions that arise around these topics. So I invite you to, as I said, hold your questions or put them in the chat, and I will look at the chat towards the end of the presentation. So thank you again for being here. I hope that you have a way to take notes. I'll be going over a great deal of information, and notes are going to be important. Okay, so why is college planning critical? I think we know this, but just to look at some of the average numbers. So in-state average public college is about 26K. Out of state, we're looking at 42. Private, 53.9. On average, and this has gone up quite a bit over the last decade, so I'm really proud of people, but the average saved is about 18,000. Used to be like 5% of the people had more than $5,000. So this is much improved, but it's still, as you can see, not even, it's half a year's college maybe. And 44% of families report not having anything saved at all. At the same time, 33% of our kiddos are graduating public universities in 4 years. 58% are graduating in 6. 53% of our kids that go to private universities are graduating in 4, 65% of those in 6. Overall, only 41% of college students are finishing in 4 years. So we're all thinking 4 years to get done, 4 years of money, 4 years of this, but very often it's 5, 6, 7, 8 years. And we know that the massive amount of debt that so many students incur comes in years 5, 6, 7, and 8 and beyond. So for 4 years, or using the averages here, so you're looking at cost of degree of $156,000 for 6-year in-state to $215.5 for 4-year private, or $254 for 6-year out-of-state. That's why we need to do some planning. So I'm really grateful that you guys are taking a little time this evening to spend with me. I have a college success program that I've put together. I work with students every year through this process. And it has 3 parts. So the premier student preparation, the savvy college selection, and then the abundant funding, because you need all 3 of these to work together in order to have what I call college success, which is a well-prepared student graduating in something they're interested in and can get a job in if that's their goal, and at a reasonable price that they and their family can afford. So tonight, our focus is on the abundant funding portion of those 3 pillars. Funding strategies is actually pretty broader than most people realize. So I thought I would delineate some of the things that are included. So there are academic strategies, there's scholarship strategies, need-based aid maximization strategies, tax scholarships, child tax capacity strategies, cash flow, retirement, grandparents, and other people. And today our focus is going to be on scholarships and need-based aid maximization. So how much does a year of college cost? We talked about the average, but how do they get that number? So there's something called the cost of attendance. And this is an annual number, and it includes tuition and books and room and board, a set figure for travel costs, insurance, fees, and expenses. This is an official number that each university will have. And sometimes the colleges or majors inside the university might have a slightly different cost of attendance. For example, in the arts with the materials or the studio time, or in engineering or sciences with the laboratory equipment and materials and time, those may have a higher cost of attendance than some of the other majors at a university. But there is an official number for every school year at every school of what the cost of attendance is. And that is important because that official number is what is used when you calculate financial aid eligibility. There are net price calculators on every school's financial aid site somewhere. Some schools are great and say, hey, it's here, and other schools hide it in the sub basement. So I put the link on here for collegecost.ed.gov, netpricecenter.aspx. That is the Department of Education's central website, which has links to every college and university that works with the Department of Education, which is virtually all of them, to their net price calculator. There are a variety of net price calculators out there, and you can use these to input your numbers. So your particular income, your particular assets, and hopefully the good ones will also ask for your students' GPA and their test scores, because those schools are using a net calculator that are going to bring to bear and bring into that estimated net price those automatic scholarships that they have at their schools. So in general, the net price calculator should take about 15 minutes for you to go through if you have your numbers handy. If it just asks a few questions, that is not a very helpful net price, but that is something that you can use. And you can also use it strategically, for example, to motivate your student to study again, to take an SAT or an ACT or a CLT and redo their scores and up their scores, because they can say, oh, if you raise it this much, your scholarship will change this much, which times 4 years is that much. So for these few hours of study, you could change the net cost of school, $8,000, $10,000, whatever the case may be. So that is a very useful device. Okay, so where is financial aid money? This is from the Chronicle of Higher Education. This does not include private loans. They took those out several years ago because the pie was far too full of loans. So the big yellow piece of the pie are federal student loans and parent loans. Then we have that light teal in the upper right, that's federal tax credits. So if you're not aware that during the college years, there are tax credits you can take, and there are certain requirements for all of those, and they just got extended. So you'll need to look into that and make sure your tax preparer is aware that you have someone in college during that calendar year. And remember that for 4 years of college, you have 5 tax years because of the way the school years span 2 different years. So you'll have 5 tax years that you can take those credits, and there are different limitations and qualifications. So work with your tax preparer on that. Work study is another one, and that's the purple. And then the salmon color is institutional grants. When I do these live and I ask people, what is institutional grants? Most people have absolutely no idea. We will come back to those in a minute because you need to know what those are. The very skinny little blue, royal blue there is private scholarships. So those are your Walmart and Coca-Cola and Knights of Columbus and all those sorts of groups. Those are private scholarships. And then you have your employer grants. So some of our companies will reimburse their employees for their education expenses. We have non-federal loans, which is interesting because it's not all the private loans. So I'm not exactly sure. We're not clear on what exactly they mean by that. And then we've got at that bottom there, the medium blue is federal grants. So that's mostly your Pell Grant, but also your SEGO grants, your Supplemental Education Opportunity grants, and some other grants. There's a really skinny burgundy next to that, which is work study. I'm sorry, because so on the bottom, that little skinny one is work study, because I wondered when I said that before. The purple on the upper right above the salmon, that's your state grants. So your Cal grants and your Bright Futures in Florida and all those sorts of things that different state governments have. Okay, to go back to that salmon piece, institutional grants, what is that? Well, those are tuition reductions, scholarships, and grants from the colleges themselves. There's a much bigger piece of pie than the private scholarships. Please take note. And then we will talk about how those two impact your need-based aid eligibility as well. Okay, need-based aid. How much aid do we qualify for? That's what everybody wants to know. So you have the cost of attendance. We talked about that before, minus your EFC, minus your resources equals your need. So your EFC is your expected family contribution, and that's calculated through the FAFSA form and then also the profile form. And we'll go through the 2 forms separately in a few minutes. Basically, rule of thumb, it's the minimum out of pocket you're going to have to pay before any school gives you any aid. And that will be constant. It's based on your assets and income. We'll get into that, what it's based on in a minute. And your EFC will be whatever it is for that school year for that child, based on the formula from the forms. I'm going to drop down to the bottom then. Resources are outside sources of funds, including friends, relatives, grandparents writing checks, and private scholarships. So you can look, if you look at the top again, so the cost of attendance minus your EFC minus your resources equals your need. Private scholarships directly impact dollar for dollar your need-based aid eligibility. Private scholarships, I'm going to say this twice, dollar for dollar lower your eligibility for need-based aid. You need to be aware of that. And you need, so having an idea of what your EFC is to know whether or not it makes sense to get private scholarships and go through all the process of getting those is going to be critical. So what do you need in order to fill out these forms? So here's what you need. Your base year federal tax returns for your parents and the students. Oops. Bank statements, account statements, trust documents, real estate net values, a calculator, a pencil. And I always like to put down a glass of wine, but not two, because it's stressful. So you want to relax a little bit, but you don't want to get unfocused. So you need a lot of documentation. So you want to get those things together before you get started. They keep simplifying the form so it looks easy, but having the right numbers prepared to put on the form, that is the part that you need to spend a little time on. And I'll get into what those things mean. So the FAFSA form you may have heard of, that's the free application for federal student aid. So that's what FAFSA is, the acronym for. Oops, sorry. You apply online only. Used to be able to do it in paper, not anymore. FAFSA.ed.gov. And then a couple of years ago, they added smart logic to the form. So you may have questions that your friend does not have, or vice versa, because the way you answer certain questions, they will give you other questions or not give them to you. The FAFSA forecaster is the Department of Education's EFC forecaster, but it doesn't ask enough questions. So it's pretty useless, but I mention it here because otherwise you might say, oh, she didn't mention that. This looks really helpful. It's from the government, must be useful. It's really not. So you want to use the net price calculator. Sorry. Unfortunately, the government didn't really help us on this one. And then you have 804 Fed Aid is their question hotline, because you may get stuck. There are places to get information, little help and information windows in the FAFSA itself, but you may still have questions. I'm going to try and eliminate most of them, but everybody's situation is different, and some of our situations are rather complex. Okay, before you file or can do the FAFSA, you need an FSA ID. So an FSA ID is an electronic number. You're going to create it yourself. One of the parents will need one. The student needs one. You're going to use this to sign your FAFSA, and you're going to need to use it to sign your federal loan forms. You need your birth dates and your social security numbers. And you want to keep it private, because anybody with those three pieces of information can sign those kinds of forms on your behalf. And you may not like that so well. I'm sorry. So fsaid.ed.gov. Typically, you can go to the website and get it right away and set it up. Sometimes it takes a day or two. I think it's just because the government servers are not the best things in the world. But just so you know that you need them. It's a good idea to have different ones from your student. You reuse them every year. It's not the end of the world. If you lose it, you can make another one or you can change it. But it's a good idea to be aware of that, because you're also going to sign, if you do federal student loans, you'll sign them with that ID. Okay. It's kind of like a PIN. All right. So here's the boiled down formula. The formula is actually about 30 pages long. And with, like all government things, has nice little tables in it and all sorts of little special codicils and things, because Congress is Congress and they don't do anything simply. Okay. So basically, we're going to look at your AGI and we're going to take out an allowance, and 22 to 47% of that, depending on what your income is, will be added into your EFC. Now, what's the base year AGI? because it's not this year. So if you have a student who is starting college in 2022, we're going to subtract 2. 2020 will be your base income year. So you're going to use your 2020 taxes. The reason that this is done this way is now there is a data retrieval tool. And so by using your 2020 taxes, you'll file those in 2021. The IRS will process them. And then in October of 2021, when your child is a senior, right? That's the fall of senior year, you can open the FAFSA opens and you can file. Hopefully your tax return that you filed in April for 2020 taxes, now we're in April 2021, that's filed October, it's processed. So when you do your FAFSA, you can pull the data in from the database at the IRS. So that's why they're using what's called prior year or the base year, okay? So rule of thumb, easy way to remember it is whatever the year of the fall, whatever the number year of the fall of the school year, subtract 2. So if the 2022-2023 school year, you're going to use 2020 because 2022 minus 2 is 2020. Some people ask about summer terms. So the school year goes fall, spring, summer. So if you're going to start in the summer or you're going in the summer, that school year starts back in the fall. Okay, so that's what the parent's AGI is. See, it looked simple when I put the slide up, didn't it? It's not so much. And then the parent's asset, they have adjusted the assets allowance. So it used to be the age of the older parents roughly times 1,000. Now it's roughly times 750. Again, it's one of those handy dandy little charts the government likes to put together. And 5.65% of those assessable assets will get put into your EFC. And then we're going to add to that your student's AGI. So if your student worked in 2020, they have a tiny little allowance. And then 50 cents on the dollar are going to go into the EFC. And if they were a dutiful, great student and they saved it all of it that they saved will times 20% of it will go into the EFC. So simple thing, free advice. Your student assets should be mom or dad's assets, which the student is, payable on death or has access to, but it's the parent's Social Security number. Therefore, if there's interest on that account, the parent's going to pay it. And that way it's a parent asset, not a student asset. We will get into more of the assets and whose is what and which ones get assessed in a minute. But that's just a quick free thing because you have an asset allowance as a parent, it's only 5.5% versus 20%. You'll want to move their money. Okay, I mentioned the IRS data retrieval tool. Sometimes you see DRT or called DIRT. You will be asked partway through the FAFSA, if you would like to, I am so sorry, go into to use the database to go over to the IRS. Say yes. They'll give you, there's a couple of situations where you can't use it. They'll let you know what those are. And if you haven't filed, of course, you can't use it. And you'll go over to the IRS site, fill in your information, and click to pull your data over into the FAFSA. And then they'll send you back to the FAFSA. So it can be a little nerve-wracking because they say, you are leaving our site. And it's like, oh no, it's like, that's just fine. You are leaving their site, but you'll come back. It's just the way it is. But sometimes people freak out when they see that. So don't freak out. And the first year they did this, they did not hide the data and there were some security breaches. So now when it comes over, it will just give asterisks and say that it's from the data retrieval tool. There'll just be a note. So you will not be able to see your numbers. You're sitting with your tax return, you know what those numbers are, but on the form, you won't see it. Okay. Who is a parent is one of those questions that gets asked. Oops, I'm going to get all these bubbles to come up. Okay. Because there's actually a whole sheet with a table explaining who is parent on the FAFSA. So if you're divorced, if you are divorced and not remarried, then the biological father or mother, the other parent, does not show up on the FAFSA. If you're divorced and remarried, then you're, as the parent on the FAFSA, and your spouse will both show up, but the biological dad will not. The Jones are raising their grandchild. Are they the FAFSA parents? Nope. The parents are the parents. So, and then I've remarried. Does my child have 3 parents for FAFSA? Not for FAFSA, maybe for profile. Okay, so for more information, federalstudentaid.ed.gov/pubs, you can dig into the details. And then who is married is another question that comes up a lot. Married parents, whether they live together or not, divorced or unmarried parents who live together, legally or informally separated parents who live together. If you're not married, you must live separately to not both be counted. And then you use the divorce or separated status on the FAFSA. If you're never married, use never married. But if you are unmarried and living together, you're both going to get counted. So it's kind of weird because that's here. It's divorced unmarried parents who live together. So if you are, I suppose, the parent and you are living with someone who is not the biological parent of your child, then you're not going to report them. Kind of should. And it doesn't matter what gender you are. Okay, they've clarified all of that. So now when we have same-sex partnerships living together, we've got married couples living together, both of those parties are being expected to contribute to the child. Okay, what is an independent student? People always ask this question because independent students don't have to report their parental income and assets. And back in the 80s when I went to college, you could struggle for a year and become independent of your parents and support yourself. You can't do that anymore. Now you need to be at least 24 or married or be providing at least half the support for legal dependents other than a spouse, whether they live with you or not. You need to be in grad school or an honorably discharged veteran, an active duty military person who is not in training, a ward of the court, a foster child or a former foster child, an orphan, an emancipated minor in legal guardianship, or an unaccompanied youth who is or was officially homeless or determined to be at risk of homelessness and is self-supporting, okay? So it's pretty hard to be independent, but if you can, you want to be, okay? So what is an asset on the FAFSA? So your liquid assets owned by you or your trust, so your bank accounts, your investment farms, your real estate, not including your house, your UGMAs, UTMAs, 529s, covered Ls that you own, stocks, bonds, CDs, liquid assets, the whole portfolio, okay? Except for your primary residence or family farm, your personal belongings. You may have a Lamborghini out front. It is not an asset on the FAFSA, okay? You may have 3 planes. They're not assets on the FAFSA. You may have whole or universal life insurance for the FAFSA. That is not an asset. Your business with 100 or fewer employees, like my business, I'm the only person here. My business is worth 0 for FAFSA. Your pension or retirement funds do not go on the FAFSA. UGMA and UTMA accounts the parents are custodians of don't go. ABLE accounts, retirements, pensions, if I have that on twice, annuities, non-education IRAs, KIOs, things like that, okay? It can get confusing. 529s belong to the custodian, not the recipient, okay? So it's not a student asset, it's the parent asset, unless the student's the custodian. That's partly because you can change that recipient and child number 1 doesn't go and child number 2 can have the money, you know? So you can't say, oh, well, you know, child number 1 has no money, all the 529s are for child number 2. No, it doesn't go. They belong to the parent. I'm sorry about the automatic forwarding. UTMAs and UGMAs belong to the owner, not the custodian. So they're a little bit different. The rule of thumb, if you're not sure, like on a savings account, things like that, follow the money. Who's going to pay the taxes? That's the owner. Okay. Hopefully that will clarify a lot of people's questions. One of the questions that comes up, because some of our kids apply to 1 or 2 schools, some of them apply to many schools. So if you're applying to more than 10 schools, you need to submit your FAFSA with schools number 1 to 10. You're going to wait 3 or more business days and do a correction and change some or all of the schools, then resubmit it. You can also share the DRN, which is the data release number, with the additional schools. So if you have a school that it was one of your 15 schools as you cycle through doing your FAFSA and they're having trouble, you can give them that data release number, and that along with your birth date and social, which they have from your application, they can go fetch and get the data. Some states require you to put their schools at the top of the list to get qualified for the state aid at that school. So you'll want to do a little due diligence to see how that goes. Otherwise, they no longer tell the schools which other schools they're sending it to. They used to. But a lot of times I just say, put them in alphabetical order, unless your state requires their school to go first. And that way you can keep track for yourself which ones you've gotten on your FAFSA and submitted it. Okay. Special circumstances. Sometimes things happen, especially it's October of 2021. I'll stick with my same example that I used. So my 2020 income was whatever it was, and we had COVID and all that stuff going on. Life has changed, and maybe I've lost my job, or we've had a baby, or we've got a big medical thing going on, or somebody died. Then you have a special circumstance. So in those cases, you want to write a letter to the financial aid offices with documentation. I would strongly encourage you to call them and say, how do you want this? Some schools have a form. Some schools have an online place they want it. Some schools want an email. Some schools want hard copy. In each case, you need to be providing documentation. Okay. So if you got laid off, your hours got cut, all those sorts of things, you have new child, you've got new medical things, somebody died. So a big change in the family like that, let them know. They can adjust your EFC. There are special requirements in the law that they can follow, and then they can make adjustments to your aid eligibility. Okay, the errors. People don't file at all, or they file after the deadline because they think they aren't going to qualify, or they just don't get to it, or they're scared or whatever. Please file. A lot of institutional scholarships require the FAFSA, because if you don't file, those schools, and they don't tell you whether they do or not most of the time, but many schools, if you don't file the FAFSA, they think, okay, cool, you want to write a check, we're good, we'll take your check, because their business objective is to get as many students paying the lion's share of the tuition and all of that, versus the students who are not paying as much because they need more aid. So they're balancing their books in the process. So you want to file so you're eligible for everything. Just open all the floodgates so that you can get anything you can get. People don't follow the directions or read the definitions. So I mentioned that there are helps on the FAFSA, and I've gone over a little bit on parents and then retirement assets. Those are the two biggest things that get done incorrectly. And then not using the IRS data retrieval tool. So we used to have to review and verify about a third of FAFSAs. Now with the IRS tool, we're not verifying as many. It's a good idea to use it. Obviously, if you are, running a business or something that's on a calendar year, and so your tax return dates, October 15th or whatever, it's different, but you'll need to do the best you can. And then reporting taxes withheld and not the assessed tax liability is one other error. So be careful. They'll tell you which line on your tax return that they want to get the data from. And that actually, if you use the DRT, it should come out properly, but sometimes people don't. Okay, additional forms, because sometimes it's just the FAFSA and sometimes it's these other forms as well. How can you tell the difference? If you go to the financial aid page on the website for the college or colleges your child is applying to, they'll tell you what they require, and they will give you the deadlines. And so some schools are also going to require the CSS profile form. It is a division of the College Board, and it works just like the SAT. You pay to file it and you pay to send your information per school. Okay. The FAFSA form is like getting your teeth cleaned. The profile is like getting a root canal. They will ask for everything and nothing is excluded. So they'll look at your home equity in your home. They'll look at everything, your retirement stuff, your life insurance, the works. They will look at positively everything. These schools tend to be the schools with deeper pockets. So they've got a lot of more institutional aid. So it's worth the effort to get the forms filed. They typically deadline earlier. So you'll just want to pay attention. When you put together that list of schools and your student is starting to apply, if you're not working with me or somebody like me, you want to see what your deadlines are for financial aid forms, because that's something the parents typically do, even though it's technically this child's job, but get serious. And then some schools have their own forms. Some do them instead of the FAFSA and College Board's profile. There's a few schools that do that, mostly not. Some will do them in addition to. So there's a school that I know of that does the FAFSA, the profile, and has their own forms. Okay, so you'll really need to watch what they require. Okay. As I said, the profile is a division of the College Board. It's $9 to file plus $16 per school. It's very detailed, and it's going to look at 3 years of income information. Prior year, which is the same base year as the FAFSA. As I said, if you're starting school in 2022, it'll be the 2020 income and your prior year projection. So if I've got a student who's going to graduate in 2022. So 2021, 2022 is their senior year. So 2020 is the base year. The profile is also going to ask me to project out till the end of 2021, because I'll be filing this in October. The year won't be done yet. What's the income going to be? And then they also want me to estimate what is it going to be next year, 2022. They want all of that information. And every school uses a slightly different formula, and the EFC is usually higher than the EFC on the FAFSA. So the FAFSA only regulates federal aid. Many states also use it also for their aid. The profile form, the schools that require it use it for their institutional aid. The rest of the schools are going to use the FAFSA for their institutional aid. That is their money, and it's up to them how they want to evaluate who they're going to give it to. So that just is what it is. Okay. About 10 years ago, this is what their formula looked like. Okay. So it was 46% of the base year AGI, 2 to 6% of assets, 50% of the students' AGI, and 25% of their assets. So this is a very, 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 very rough idea because it's 10 years old. They don't publish it anymore, and all the schools are tweaking it and making their own particular formulas. But that gives you an idea, and you can see why it's typically higher, that you get a higher EFC. Okay, IDOC is something else I want to mention. So if you're filing the profile, some of the schools will ask, so there's two things. Some of the schools will ask additional questions. You get to the end of the profile, and it's like, we're done, honey. Wait a minute, we're not done, because there's a supplemental question. So sometimes that happens. And then another thing that happens is sometimes at some point later, you will get an email saying, hi, this is IDOC, and that you need to submit your tax returns and other things. W-2s typically and tax returns are the two things they typically ask for. And IDOC is a service of the College Board, just like the Common App is a service to for students to submit applications. This is a service for you to submit your tax returns to schools. They'll give you the directions of who wants what. You will also find that information on the financial aid website for the colleges that you're applying to. So it shouldn't be a surprise that it's coming, but sometimes it is. Okay. Your need varies. This gets people confused. So in my little diagram here, the purple at the bottom is your EFC. Okay. And then depending on the cost of attendance at the different colleges, your need is going to vary. So at a low costing college, you're going to have very little need. At a high costing college, you'll have a lot of need. So don't let that throw you. Okay. Your EFC is the same everywhere, but the need is that difference between the cost and your EFC. And we'll look at why this matters. So here's an example. So I went to Northwestern, so I like to put the rival school of University of Illinois and compare these two. So let's go through U of I. So the in-state cost of attendance is about 32. Oops. And for a 5,000 EFC, so you need about 27. Their average percent need met is great for a public university. This is their flagship school. They tend to be better than the other satellite campuses in each state. So they meet about 68% of need. Oh, wait, what did she say? They only meet 68% of need? Yes. So you need 26,952, and you're thinking, cool, we'll get aid for that, we'll be okay. No, not necessarily. They may not meet all of the need. So on average, 32% of the need for families going to U of I is not met at all. So you're just going to add that right into your EFC, okay? Then you have the split between gift aid and self-help. So gift aid is what you think it is. It's all the stuff you don't have to pay back, whether it's tuition reductions or scholarships or grants. It's money you don't have to pay back. No matter where it comes from, it's money you don't have to pay back. Self-help is not what you think it is. It is student loans. it is parent loans, and it is work study. Okay, so work study is different than the loans. Obviously, work study, I'm working it off, I'm earning that money, I don't owe anybody at the end of the year. Loans, I do. Okay, so in this scenario, the out-of-pocket cost is about $15,593 because I've added that 32% of unmet need into the total. The true cost when I add the loans back in is $15,562 for 1 year of school. Now we'll look at Northwestern. Northwestern's prices are disgusting. Okay, we have a bunch of schools that are in this boat right now. So it's almost 80 grand, same EFC. This is where a lot of families just quit. Okay, we need 74. I mean, we just can't afford this school. Like, wait a sec. What we really need to know is the net cost. So the percent need met at Northwestern is 100%. So like many of our very selective schools, they're 100% need met, and they're very generous. They have a good endowment. So it's 85% gift aid and 15% self-help. So that breaks out to those numbers, and your out-of-pocket cost stays around 5 grand. Your true cost when you add back in the loans is $1,640, which is less than the true cost of U of I. Now, Northwestern has outstripped U of I in raising their prices the last couple of years, but it's still less expensive until the EFC for your family is higher than the cost of attendance at U of I. So that's where percent need met becomes a really important thing to consider. And then the break between gift aid and self-help. Now, in both of these cases, you will notice I did the worst case. I assumed all the self-help is loans. Typically, some of it is work study. But when I'm estimating things for families, it's always best to look at the worst case. So that's why the numbers look like that. Okay. But then you're seeing the difference too. What you're going to get at Northwestern and the amount of access to professors and research facilities and opportunities is different than U of I, as good as U of I is. So there's a lot of factors to come into play. But when you initially look at it and go, 32 versus 79, yeah, we're going to go to the 32K school. It's like, yeah, okay. You might get less and pay more. And you've got graduation rate differences as well. So it's not a simple scenario, and don't let that sticker price throw you off. You need to be very conscious of your net price. Okay. Let's look at scholarships. Yay, everybody loves scholarships, free money. Who doesn't like free money? Okay, as I mentioned previously on the chart, far more scholarship money comes from the colleges than from private scholarships. In fact, 90% of all scholarship dollars come from colleges and universities themselves. Now, with the pandemic, that may shift because a lot of schools are financially strapped. They're also trying to get students. So there's going to be a lot of adjustments going on, but that's what it has been till now. Some of these have special applications and or deadlines. Some of them use the application for admissions to the college as the application for scholarships. So it's another thing you want to make sure you research. So you're going to end up having 3 sets of deadlines: your admissions applications deadlines, your financial aid document application deadlines, and then if there are special scholarship applications deadlines. And you may have multiples of those, right? You might have your application, you might have multiple financial aid applications, and you might have multiple scholarship applications for each school. So this is a process that needs a lot of management. Okay, so it's about 18% of all financial aid. Some stats to help you. 58% of public college students get merit aid. 66% of private research schools get merit aid. Students get merit aid. 89% of private college students get merit aid. Okay, so that private research schools is a subset of the private college students. So 52% is the typical discount. So hear that. About 90% of kids going to private colleges are getting aid, and the typical discount is half. Okay, so when you are looking at schools, that sticker price can lead you astray. You need to do your math. And if you hate math, call me, I'll do it for you. Okay, so why are scholarships given? They're given for academic merit, athletic skill, other skills like debate, leadership, that kind of thing. The type of college, I'll give you an example of that in a minute. The academic interests of the student or the college. For example, colleges are consistently starting new majors and they want to attract students. So they may be throwing extra scholarship dollars to start getting more students in that department. or the student, a lot of the big universities have money that's at the university level and the college level and then the department level. So that can happen as well. And a lot of times you don't really know. You may know that something's new, but you don't know if there's throwing money at it or not to build the program. Or something is shrinking and they really want to grow it because they've got, you know, a new endowed chair and a great professor or somebody come in or whatever. They've just gotten a big research thing, or there's so many factors that we don't know. So these are going to change year to year. And then institutionally determined factors. They may be looking for more guys because we know that more women are going to college than men. They may be looking for more white people in a school that has lots of black people or whatever, you know, or home state. Some of the Catholic schools, for example, pride themselves on having students from every state. Okay, well, places like Utah don't have very many Catholics. So that may be a factor that might help you if that's the scenario that you're looking at. So, or, you know, the all 50 states, well, the states that are less populous, you're going to have a little bit of an advantage versus the states like California or New York, where there's tons of kids applying. Okay. Type of college. Percent of students receiving scholarships at research universities is 36 to 58, which surprised me. That's actually pretty high. Those universities tend to be larger, well-known, well-funded, and they're not looking to attract students. So a lot of that is alumni scholarships and things like that. And this doesn't say how much money they're getting. They're just getting some kind of scholarships. Okay. Master's colleges are colleges that only offer bachelor's and master's degrees. So 91 to 100% of the students there are getting scholarships. Liberal arts colleges, 93 to 100%. What do you mean? Doesn't have to depend on my grades or this or that. It's like, actually, no. These schools tend to be regional. They tend to be a little niche and have particular things they're really good at. And they're trying to attract students. So they are using scholarships like a coupon to draw students. It has happened that I have gone with students to college tours, and in the admissions office, before we even left the office to go out to campus to walk around, they've said, oh yes, everyone who comes here gets a $10,000 scholarship. They're trying to attract students. So that meant that their $45,000 sticker price was really $35,000. And then you go from there about other scholarships. You know, when you get a scholarship for breathing, you may get other scholarships because you actually have some skills. And then we have schools like your Harvard and Yale and MIT and Stanfords and Browns that have 0% that get scholarships. Hear the clear difference. That's scholarships. Those schools have deep pockets and they use them for need-based aid, not for merit-based aid, which makes sense. If you think of the caliber of students at those highly selective universities, how do you, you know, when you're in the up in the nosebleed section, you get a 4.6 GPA and a 4.61. I mean, how do you really differentiate? So they don't give any scholarships. Okay. But a lot of these other categories of schools do. So I want to make you aware, because sometimes we think, oh, I've got a B+ student, they're not going to get anything, or, you know, mediocre athlete or whatever it is. It's like, well, there's a lot of reasons that colleges give scholarships. Okay. So I wanted to two things on this slide, and then we'll go to Q&A. Invite you to have a consultation. So there's a couple of them that you will find at celticcollegeconsultants.fullslate.com. One is a general overall. We'll talk to the student and look at their accomplishments so far and their goals and where they're at in the whole process and the financial part and all of it. And then there's specifically a financial aid eligibility evaluation consultation as well. So I have a couple of different options there. And then there's a bonus gift just for taking the time to watch this. I have put together an ebook called 15 Ways to Save $10,000 on College. You can get that at tinyurl.com/save10K on college. And I think it'll ask for your name and your email. So you'll want to get that. I have worked really hard at updating that every year, and things in it are actually doable. I hate when you get these things and people go, oh, here's the stuff, and it's all high level and you can't really act on any of it. Like, no. These are actually things you can go do today. And typically many families can use multiples of those. Okay. So let's see what's in the chat as far as questions, and I will answer them. So, and I put at the bottom, if you're looking for the link to schedule a consultation, that's there. and as well as my other contact information. Let's see. Thank you, Jennifer. So hopefully you all will look in the chat. So the link to the net price calculator changed. I'm actually delighted because now it's a little bit more straightforward than it was. I just got a notice from the Department of Education as they are getting ready to leave, and they've made a number of improvements. This was not on the list, but I'm guessing this is probably one of them. They've really worked hard at making a lot of things better. Can you use the same ID for multiple students? I'm assuming you mean the FSA ID, and you as the parent, that is your FSA ID. So yes, so Janie's FSA ID will be Janie's and mom's will be mom's, and for Janie, and then you go for Sam and you're still using yours. And yep, that's the same. If you can't use the DRT, then you'll put in your numbers and submit your FAFSA, and you may get called for verification. If you use the DRT, it's almost no chance that you will. If they get called for verification, it's just more paperwork, and they're going to want to see documentation of your tax returns and things, just like they would if they could pull from the IRS DRT. So, and if you have had other issues because of identity theft that have happened in your family that impact your ability to take loans, or other things are going on, or there's money that's tied up because of that process still being unresolved, let the schools know. So send them a letter to the financial aid office. Again, reach out to them and ask, how do they want to know? That would be a special circumstance that they would want to know about. Is the percent need met on the college's website? Wouldn't you like that? Absolutely not. Nope. So there are some databases out there. collegedata.com is one that I use that will have that information in it. All of the colleges are required by the Department of Education to submit a bunch of information every year, which is where we glean a lot of this data from. And that's where we get that from as well. But no, the colleges do not advertise. And if you ask them, they will either deny that they know what you're talking about, and they may not know depending on who you're talking to, or they will lie to you. Nobody's going to tell you that, with the very, very rare exception. There are a few very, very Catholic schools that are pretty honest about everything, and they'll tell you that. But no, they won't tell you that. Okay, the difference between CSS and IDOC. So CSS is short for College Scholarship Service. It is a division of the College Board, which is the SAT testing people. IDOC is one of the products that they have. And so some colleges will hire them if you had to file the profile form, which is another one of their products. And if the school wants the profile form as well as your tax returns and W-2s, then they will use the IDOC service as well. And it is a way for you to securely submit your documentation, and then it is dispersed to the colleges that require it through the profile. Okay. Are there penalties to transfer 401k money to a 529? You'll need to ask your tax professional, because there's all kinds of details in that. And then when the money is used, is it taxed? It depends. And I had a question that was emailed to me about disbursements from life insurance and 529s. Say you go to school and you take out some money from the 529, then typically in that scenario, it's not taxed. But on the FAFSA form and on the profile form, they ask you for untaxed income. That's where that gets reported. Oh, but they'll never know. Actually, they will. I mean, you're committing fraud if you don't, and you could be liable for all sorts of nasty things when you're committing fraud with the federal government. So that's where that goes. Okay, if aging parents have asked you to be on their bank accounts, will we have to count those monies as ours? So that's the similar scenario to your student working and having their money, but it's on mom's account. So if they're the primary person and you're the or person, so that's their tax liability, it's their money, but you can do things because you're helping them, then it's their money and it does not count as your asset. Great question. That is happening more and more, so many of us doing this. Social Security retirement benefits included on the profile? No, they are not. They both, I believe, no, maybe it's just a profile. I will ask you if you're expecting Social Security, but they won't ask you how much, which makes sense because none of us really knows, right? Because Congress is, as long as they're in session, we don't really know. Should you fill out the CSS profile for a school, even if they did not ask? No. No, the schools are very good about telling you what they want. And if they don't want something, they're not really ready to receive it. Oh, I'm really sorry to hear that. Okay, so I guess I'm being told that the ebook is giving an error and I'm not sure why. I tested it, it should be working. So if you want that, either email me because you should have my email by now and it's on the screen. Yeah, email me would be the best way. So email me and I can send it to you. It's a PDF, so I'll happily email that to you, as well as I will go back and see what's going on because that link should work. ESA is a covered L, I believe. Different than a 529. So if it's the owner, so yeah, it's going to be handled differently because it is by the owner. And then it's a student asset. And those are limited on how much money you can put in them anyway. Okay, great question. So when you're asked on the profile form, unlike on the FAFSA, because the FAFSA doesn't ask you anything about expenses, but the profile does. And it gives you an opportunity to share about education expenses. And if you're a homeschooler, you have education expenses. You're running a private school, you're paying for curriculum, you are paying for various services, you're running a school. So I call those education expenses. Be ready to document them, but you have education expenses. Okay, this question is about medical expenses not covered by insurance. So that's out-of-pocket costs and patient portions of medical costs. So if I have to, pay $50 to go to the doctor and I need a procedure and 20% of that procedure is mine, I'm going to pay the 50 and the 20% are both going to go into the medical expenses. It's everything that's coming out of my pocket. And if I've got a hearing aid, that's not covered by insurance. I've got, glasses. I just got new glasses. Then there was a whole bunch that was not covered by insurance. All of those sorts of things for the entire family. So yeah, you'll want to put all of those things into that figure. Okay, I think that is everyone's questions. Oops. Okay, so you really can't send a profile form to schools that do not ask for it. But if you remember on the special circumstances slide, one of the things I had a picture of somebody with a doctor. So significant medical expenses is a reason to write a special circumstances letter to a university or college and ask them to consider those as they calculate your EFC, and they might make an adjustment. The same goes if something's coming up, say, like I have a friend who her husband just got diagnosed with something and they're looking at surgery. So they know that's going to happen. They would put that down. We're expecting to have this surgery. I have a C-section scheduled for August or whatever the thing is that's coming up. Let them know those things because those are significant, especially, our out-of-pocket part is can be quite hefty. So yes, you're only going to do the CSS. So there's the link again for the school. Hopefully it will work. Otherwise, please do email me. And, I already have your name and email address for signing up for this. So it's not like you're giving me any data I don't already have. But hopefully you'll be able to get that from that tiny URL. I will work on fixing that. And I'll look at, because there's a recording of this being made and that should be getting disseminated. If it's possible for me to add on an updated link to get that, I will give that to you. Oh, good. And so it worked for somebody else. So make sure it's HTTPS because it is a secure link. And yes, you only are going to do the profile form and IDOC if requested by a school. So all but 1 or 2 schools in the whole country are going to want the FAFSA. That's your baseline. You're going to do that. And then profile only if they ask. So check the financial aid page and also check by the way they're applying. So if they're applying early action or early decision or regular decision for schools that have those options, sometimes they've got different rules and different deadlines for those different admissions programs. So, okay, do we have any further questions? I'm looking at the time and actually talked a lot faster than I expected to. So I'm being asked what services I provide, many. So please go to my website, celticcollegeconsultants.com, and take a look. There's a lot of information there about the services. Yes, thank you, Jennifer. The Roth IRA distributions are going to be the same way. It's untaxed income. And I provide full services from career exploration, student development, leadership development, picking courses, testing, picking out colleges, exploring majors and all of that, the whole application process. I actually prepare and file FAFSA forms and profile forms every year for my clients. So the whole gamut. I'm a holistic college planner. So I provide a lot of services and they're custom. I customize my programs and I do everything one-to-one with students. Tuition exchange programs, I am not sure. You should be able to look at wherever you're doing that. If that's through the state or something, they should have information. Or if you call a financial aid office with a question, ask enough questions, and it's a little easier with COVID because the offices are closed, but you don't want to talk to a student because there are student workers and they can do the basic things, but they're not going to be able to answer a question like that. But how that plays in that state or out of state. Okay, you're not going to get your EFC back from the college. I should have mentioned this earlier. So when you file the FAFSA, the next screen is what's called the student aid report. And it's your typical government thing, which means it's not very pretty. But your EFC is on there. It'll be an 8-digit figure. So it's a little confusing because there's always zeros in the beginning for almost all of us. But your EFC will be there. Your DRN, the data release number that I mentioned earlier, that will also be on that page. On some of the ones I filed this year, they were having some glitches. So I just logged back in on a different day and I was able to get the student aid report. When you file your FAFSA, the student will also get an email letting them know. And some of them have gotten SARs, what they're called, student aid reports. Inheritances that would be other untaxed income. So I would suggest if you have special circumstances that you are aware of, to be proactive and let the college and university know that. And if your kid applies to 20 schools, let all 20 know. They're all going to have different ways that they handle it because it is up to each financial aid officer how they make those decisions and how they're going to handle the criteria. The government just gives guidelines. But you want to be proactive because what happens is you're typically filing your FAFSA in October, November, December, and you're going to get the financial aid award March, typically February, March, April. Sometimes you get them earlier, sometimes, but you want them to have that data earlier instead of getting your financial aid award and then, oh yeah, there's this other thing. Could you change that? They might be able to change it, but the bucket of money they've got left to work with is much, much smaller. So you want to hit them early when the bucket of money is big and they can make the change and say, oh, okay, you're eligible for another 5,000, whatever it is. We still got that money. Your student's a really good candidate, meets our criteria for this, that, and the other. We're the kind that we really want you to come here. So we'll beef up your package. Okay. Because there are things that it's sort of a funny business. There's things that by federal law or state law, they're required to put in your package. And then there are things that they've got wiggle room because it's their money. So a lot of things come into play there, but you want to get your data and, just anything else that you're thinking of, I'm going to beg, I want to bring the big basket early on. Because that's what you want, because it's kind of negotiation as what's going on. And a private scholarship will dollar for dollar take away from your need-based eligibility. So the question is, how will private scholarship affect your final cost? It depends. If your EFC is less than the cost of attendance, then that $5,000 private scholarship just added $5,000 to your EFC, and your out-of-pocket went up because you have the extra $5,000. If your EFC is higher than the cost of attendance, then that private scholarship is not going to impact your need-based aid at all, and it's going to lower your cost, your out-of-pocket, because you've got $5,000 more to throw at the thing. So that should we pursue private scholarships question, the answer is always it depends, because it depends on your EFC and it depends on the cost of attendance at the schools you're looking at to see, is the scholarship going to help you or not? Because it does happen that colleges will say, okay, cool, here's your financial aid and your net cost is going to be this. And you say, hey, great, Janie just got a $10,000 scholarship from Nordstrom. Isn't that wonderful? And they say, great. Yep, thank you. Your cost is now $10,000 more, and we take $10,000 out of yours grant and we give that to some other student. That happens. Okay, so that is following the rules too. Most colleges are having a gap, that unmet need piece in the middle, and they're trying to be kinder, especially now that they are getting hungrier and hungrier for students. So sometimes they will let that help you, but it's really how it isn't supposed to, because that's the way Congress set it up. But they can put it in that unmet need thing in there. But, and sorry, it's a little frustrating because it's not black and white. I did engineering undergrad. I love black and white. This is a gray, but in general, if there's an opportunity to use it for the benefit of the college instead of the family, that's the way it's going to go. 9 times out of 10, 9.5 times out of 10. They are businesses and they have bigger lobbyists than we parents do. So everything's skewed towards the colleges, which is why when you gasp, when you see your EFC, I'm like, wait a minute. Like, yeah, it's ridiculous. But when you're looking at 22 to 47% of your adjusted gross income, get real. That's not realistic, but it's what Congress set it up to be. So, well, I want to thank you again for taking the time, and really encourage you to schedule a consultation to look at kind of the whole world of how to help your student, or a financial aid consultation, so that I can further help you, and let your friends know. I like to make as much information out there available so that families are empowered. So thank you very much, and God bless you all.